Hi, everyone. Welcome to the jungle, or should I say the Red Sea. Richard, Ryan, who else is here with us? A lot of people here. Hey, Sinatra. Good morning, guys. You like the new tagline for the Flow Show?
Yeah.
So anyway, guys, if you want to be in the know, get in the Flow Show. All right. First of all, you have to be in the flow. Get in the Flow Show.
You're a poet and you don't know it. Good morning.
There's so many words that will rhyme with flow. You'll leave with a glow. Huh? Anyway, not a lot of glow on my screen today.
Red glow. The red glow of burning.
Kman was, remain negative. They didn't give you that rally to sell, but here we are at 78.6, and the dollar just lay up away from new highs. What are your thoughts? And for the first time, it looks like there's a pretty good chance for a reversal in the yen. The action from last night, I looked at it, I said, I'll wait. So what are you guys thinking coming in this morning? Hard to chase to get short, isn't it?
Yeah, I did short the cable after the GDP and the industrial production this morning. I bought them back already in the meantime. Looks like we're having a bit of fixings going on as well. So it's a bit of a support here, 121.60.70, I'd say, on the cable. Yeah, for the rest, it's a case of yields and curves. For the yen especially, we did that high. Then there was a comment about Kuroda that's saying too rapid yen weakness is not good for the economy right now. But then he's a bit of a weirdo, right? Because then for the rest, then he goes, but we will buy unlimited bonds at a 0.25%, JGB, the 10-year. And then he goes, we'll do a little bit more of 5 to 10s tomorrow, 500 billion more. So it's it's a very strange behavior by Kuroda there. But yeah, the dollar yen found resistance above, which was probably a stop or barrier hunt. And then the interesting thing is that we saw a bit of curve inversion this morning. And that's probably holding back the dollar yen, and the yen perhaps strengthening a little bit on risk off as well because of the equities coming off and the rest of the markets looking a bit sluggish. If you look at the commodities are all in the red as well, so that's helping the yen, I think, in the short term. But the big decision will be made over FOMC versus Bank of Japan, I reckon.
Gold had a huge day Friday.
Huge.
It finally differentiated itself from the market. You had risk off and strong dollar, and gold put in a pretty nice reversal, and it's only giving back part of its gains. We'll see. I don't think it will. Silver on the other hand,
constantly trying to break above 22 figure 15 and constantly failing for now.
Yeah. And even the shares were up Friday. So I think this is a break to buy in gold. I think it comes, especially if yen is peaking out up here.
Yeah. And gold is in the middle of its latest range. It went up to 75, 78, where I had a bit of resistance, now back in the 50s.
Yeah.
It's in the range, in my opinion. Once we don't break above this 18.
I think it's got to go, but that the line off this whole double bottom, was kind of a breakdown. It had a hard time closing back above it. See, so to me, this is pretty important. And now this trend line is going to be pretty close to intersecting at 1890 now. So a lot of confidence there. What do you think?
If it goes above, then I reckon it could it could fly. The thing is as well, which is interesting, is that the crypto sphere is in a bit of a meltdown, and I think we saw some of the demand in gold must have been linked to a rebalancing as well. But if crypto goes low enough and then it stalls, we may see after that, with some delay, gold take off. Just an idea. I'm not in that kind of trade, but just an idea. I'm looking carefully.
Okay. And Ryan, what are you thinking? Are we going to blow through the 103.50, 103.40 lows in euro? Here's what Kman's talking about in Bitcoin. Pretty ugly day.
Yeah, it's looking dead, isn't it?
Remember we talked about that wasn't a low. Look at the RSI. See, so it was a confirmed low, and even though it moved sideways, it looks like this will be another confirmed low.
What did I do?
Stelios went long with Ryan's money this morning.
Good luck getting in my wallet.
Good morning, guys. How are you?
London.
Hey, I have to point out though, Dale, we're approaching like the 161% extension in Bitcoin, and we're getting close to that 20,000 level. I mean, that 20,000 level, everybody, we've been talking about it for like a year and a half. Look,
the 200 a week comes right in there too, Blake. Look at that.
Yeah, I mean, there's going to be a lot of support down here, and this is going to come down to the
Fed.
The question is, are you a believer or not? And I don't like Justin Bieber, so I'm not a believer. And
poor guy, his face is paralyzed.
I know, that's crazy, right? Crazy. No, but it really is going to boil down to that. I mean, we've talked about being a buyer at 20K.
He must be long S&Ps.
He might be long some Ethereum or something. I don't know.
Boy, I just can't remember the last time Ethereum was down here.
It
been
broke
a long time.
2018 highs, the spike highs. So, and I was thinking, I'm going to buy some when it gets to 1400. But when you wake up and you're like, and you get in front of your computer over the weekend and you're like, whoa, I don't know if I'm going to do that yet.
Yeah.
You know what I mean? Especially not with Bitcoin at 20K yet. But I didn't want to, I just wanted to mention that these cryptos are really sliding in an environment where, Ryan, you just mentioned, or Kman, I'm sorry, that rates are going higher. I mean, do you really want to buy some high beta crap right now?
Hell no.
What do you guys think?
Well, you guys know my opinion.
You were right. 38 came first, Stel. You were right.
Not just that. I said that.
was right.
Just that.
Actually, everybody was right.
That's not the main thing. What is it? It's yields driving everything, in my opinion. And I said, when 10-year US was pulling back towards the 270s, I said, look, I think we're going to turn around and break those 320 highs, and when that happens, look out. And, that goes for all risk assets. And believe it or not, including metals. And metals are not up on the day, but obviously they're trying hard to outperform. And they are outperforming, but they're still down on the day. But, 12 years of zero rates in QE helped risk assets go to the moon. Well, now that we're taking the punch bowl away, they're going to go down. And the Fed will tell us when when the party starts again. And they're not, what are they going to do this week? They're going to do 75? It's likely.
Well, some in the market are already predicting that the Fed will be cutting rates second half of 2023 and early 2024.
Yeah, I don't disagree with that.
With 2 hikes in, and they're already cutting rates next year.
I had a conversation with a friend of mine earlier today, and he said, what do you think? I said, I think the Fed's going to do a massive U-turn at some point. And he goes, when do you think? 2023, 2024? I said, I think probably September, October. And he's like, what? I'm like, yeah, I think so. It's think about it. They've tightened 75 base points. They're going to tighten some more, and we're already seeing quite a big move. When the S&P goes to 3,400, like I've said before, I think they're going to really pay attention to that. And yes, they're independent, but they don't want to go into midterms with a crashing economy. So they're probably going to take a breather.
I agree. Go ahead.
That's what I was saying this morning on the Flow Show as well. 3,400 is the pre-pandemic high, and then 3,200 is a big level on the S&P. I think 3,400 is the one that that they can monitor for, as Jay Powell said, we may have to take some pain, and then 3,200, I think, is going to be the panic stations, and we may see some reversal of at least rhetoric.
Okay, so Kman's talking about the pre-COVID high.
Yeah.
Right there. Okay. You have some moving averages coming in there too. So a lot of people using this as an objective. So it'll go lower than
which
that.
means it either never gets, it either doesn't go there or it goes lower. Yeah.
Or it goes right to 3,000 or freak everyone out. So anyway, so tough environment if you're not positioned. I guess this is the time to wait. I actually think that first of all, we're gonna have some divergence in the NASDAQ. We're at new lows here, and the S&Ps maybe. I think they bottomed somewhere in the mid 3,700s. What do you think about this, guys? Now that the market is open and almost now expecting, because of CPI 75 basis point hike, that we only get 50 and you get some type of relief rally after the Fed.
I was saying exactly the same thing this morning. The way the market's talking, we've even got a bank calling for a 100 pip hike this week.
Yeah. Okay.
I think certainly let's call it the press expectations, the bank expectations are all shifting really hawkish now. And I think that sets up the possibility that the Fed go, why are you getting excited? We've said we're doing 350s. That's what we're going to do. Then we're going to see what things are looking like. But we're not going to rush into 75 pip hikes. They may be on the table, but we're not going to rush them. And I think if the market is, getting uber hawkish into this meeting, then there's the opportunity for disappointment. And like you say, then you'd probably see stocks rally. But again, stocks, it's going through a readjustment phase as well. Stocks are going to have to learn to stand on their own 2 feet again.
Yeah, and I would guess that at new lows, which look, again, like pretty easy, could happen today or in front of the Fed, that a lot of Elliottians might be saying that we're completing something with this wave down here. So I mean, even the bears are saying that we could be completing something down here for a rally. So
have to ask quickly, wouldn't we?
Yeah. So
hey guys, I want to ask you, and Brian, that makes a lot of sense as far as expectations are ratcheted up really high right now, and we've talked about this, the peak hawkishness, and apparently we're not quite there yet because now you're having these expectations really high. But what happens? I mean, do you think? And I want to ask the team this. We have producer prices tomorrow. We got the CPI yesterday, on Friday. It was really hot, and then we got producer prices coming in tomorrow. First of all, do you guys think that the PPI will be a market mover? And then second question is, do you think this is going to have any bearing on what the Fed's going to do later on this week? What do you guys think?
I think it's going to be more icing on the cake. The market set its way after the CPI report. This will either help that along a bit, or it will take a little bit of air out the tires, depending on which way it goes. It's not going to make a blind bit of difference to what the Fed does.
Okay.
Yeah, right. I don't disagree with that, actually.
You know what?
I don't disagree with that. I think. Oh, okay.
I thought you said I don't agree with that, and I was going to say, well, let's hear it. Hey, first of all, I know I chimed in a little bit earlier, but I do have to say congratulations to the team. You guys nailed it. I asked you, do we go to 4,300 first, or do we go to 3,800 first? And today we traded a 37.98. You guys win, and that's everybody.
To be fair, we got to 42.20. What was it? So it was almost a win for you. So I think we both
almost got it. And you got to admit, when we were trading
goes home with a teddy
you
bear?
were a little freaked out. So
What are you going to do with that teddy bear you won?
Yeah, you guys know, but these guys won the big kahuna anaconda teddy bear.
That's some food with it. Fill the car up.
Yeah. Hey, no, can I show you guys something real quick?
Yeah, please do.
All right. I'm gonna I want to show you guys.
You're on the F.A.C.E show, so show stuff.
Oh well, no, you guys don't.
As long as it's a chart, nothing else.
At 5 o'clock in the morning. So let's go back to just look in the bigger picture view, because I think this is important for everybody to know. We've been looking at this head and shoulder pattern forever. I mean, everybody's seen this chart for the last year. We have obviously further to go. 3,400. Dale, you're talking about everybody's targeting this area. Well, that's where the head and shoulder pattern points.
Yeah.
I mean,
what a coincidence.
That is the measured move. So, as you guys all know, we are, in my opinion, eventually going to go to the breakout point. And that makes sense. I mean, the market has a really good memory. It does. I mean, and the markets will look back and go, yeah, I see that gap from like a week, from like 10 years ago. I'm going to go revisit that gap in stocks, in single equities all the time. And, that happens in markets. The markets have a really good memory, and like, oh, we were here. We were there at one point because of COVID. We did this and then broke out because of the Fed. Well, we're going to go back and revisit that place at some point at 3,400. Can we go lower? Sure. But I assume we're going to eventually go there. Right. Now, you take us a little bit more near term, and let me move this out of the way really quick. More near term, you go, okay, well, this is the most recent low. You can see we just broke 3,800 this morning, but this RSI broke down. We haven't quite hit oversold. We're a little divergent now. And in my opinion, we have a little, what I like to call unfinished business, right? Unfinished business right here at, let's call it 37.75 roughly. That's 161% extension. We didn't hit it the first time around. We came in shy. And a lot of times when you come in shy of a key golden fib like this, you test, you get enough people stopped out, right? You get enough people stopped out, you get enough people chasing it lower, like this morning. And then, you test just a little bit lower, and then you bounce. And I'm a little fearful of trying to chase risk lower, like shorting into this weakness as we're approaching that 161% extension. So I just wanted to point that out, because I think it is something that we need to pay attention to. If, the stock market opens, we hit a new low, but we can't hold the new low. You might know why. This would be the reason why, in my opinion. So it's just something that I'm looking at this morning. And Dale, you've seen it.
It's funny you mentioned. Funny you mentioned it. I've just dropped a sell stop in the S&P 37.90 just to catch if we do get a proper break of this 3,800 level. But I'll be looking at your 37.5s for a profit take.
So you put in a 37.90 sell stop, meaning that if it breaks 37.90, you want to get short.
Yeah.
Okay. So now let's think about let's talk this out, right? So you're like, okay, well, if we break this low, I'm going to get short. But you weren't looking, and this is just, let's say you weren't listening to F.A.C.E. You and I didn't know each other. You're like, okay, if it breaks 37.90, I'm going to get short, right? And that's the order that you put in. Well, let's say, you get short this morning. New York opens, the bell rings. You get short because it breaks 37.90. It trades to 37.72. Just below that 161% extension. And then, like a lot of things, the market's down 2.5%, 3%. And you're like, and the market's like, well, we're going to fill the gap. And then, so next thing you know, you get this rally, and then you get stopped out, maybe lose a little bit if it breaks back above 38, whatever. But you weren't paying attention to you weren't listening to this morning's show. I mean, and that now why that might happen, right? So if you are going to get short at 37.90, if it stops, 15, 20 points below where you got short, and you're like, why is it struggling here? Well, I think now you're going to have a good idea of maybe why it might have stalled.
Yeah, and that's exactly right. And that's why the exercise is looking at the levels that stand in your way if you get in a trade. I see a little bit of support maybe around 80s, which ties up a bit with your 75s, give or take, then it's not down till 37.40s that I don't see a bit of support. But also take the context of the trade. This is just pretty much a scalp. I've got a 38.15 stop on it. I'm not looking to sit in the trade for 8 days. If I get 10-15 pips on a break, I'll probably be out of half the trade and then see what happens. Get the risk to zero. Yeah. But you're right. You've got to look. You've got to search the chart, see where the levels are. I don't use fib extensions, but I take note of what you point out. I take note of what others point out. And if we do pull up at that sort of area, and that's something that I'm not looking at on my chart, then I'll take notice of it. And if I think, right, it's not breaking there, then I'll get out. Take some profit and lock the stops up.
That's the important thing about being in a community. Like I look around, in our community, and there's certain traders I pay more closer attention to than others. And for those reasons, it's like, hey, I really appreciate how this person looks at the charts, or this person views the market. So I'm going to, pay a little bit closer attention to those levels. And that's why it's important that you guys listen here to the Morning Edge. And I'm glad everybody's here looking at or watching. But I want to I also, and thanks Ryan for pointing that out. I'm going to go back to crypto really quick, because I want to take just a couple quick views. You got Bitcoin here, and this is, like I said, this is not the environment where you want to be long risk assets like cryptocurrency. I mean, you've got when everybody's selling everything, the first thing that's going to get sold is our cryptos. This is the viewed in recent years as the most risky investment. It's the most high beta investment, and here you go. It's not surprising that we are slumping. But it's crazy how little you hear from the crypto bulls at this point, right? I mean, it's tough to be on the wrong side of this massive move. If you think about Bitcoin from its highs, I mean, we're down 66 cents, and can we continue lower, down towards 20K, or even below that, maybe towards 10K. And I know I said this many times over the last few months. I'm a little worried about 20K because so many people are trying to buy it there that we're either going to get just shy of it, like maybe 21,000, because there's going to be so many people trying to buy it down here. But I'll tell you what, I'm a little scared of trying to buy. I've thought about putting orders in, and I'm like, yeah, I don't know if I really want to do that just yet. How many people might end up getting shaken out below 21,000 or 20,000, and we might trade down to 15,000, like we talked about before, maybe 12,000, where you get this massive overshoot because that major level is broken. So that's, if you're out there buying cryptos, you guys have heard my opinion. These are the levels. Well, we're getting to the levels where I'm going to start socking some away, but you got to look at it, in my opinion, you got to look at it like, hey, that's money you can afford to lose. Like, what if crypto is what was it? A tulip? Was it the tulip mania? Yeah. How about if they're just, it's
an inflation hedge, man. Come on.
Well, I know it's I know digital NFTs is, where I should be putting all my money, but
I bought a house, one of those houses.
Dude, you could probably get a really cheap house in the virtual metaverse, and then you can get a really nice golden throne to poop on whenever you can poop in the metaverse. I'm sure it's gonna be awesome.
Yeah, the house, but I live in it.
Jokes aside, though, this is one of those things that if we've talked about buying crypto at these levels. If you're truly a believer, and you think that this is the future of money, then these are the levels that you buy it. But it is difficult, right? Especially when you have when you're looking at Ethereum, which is well below the 2018 breakout point. And as Dale pointed out, we're at the 200-week moving average. I mean, but could Ethereum see $400, $300? I mean, yeah. I mean, I was told by every crypto person over the last, the Lynn Aldens of the world, the Raul, what's his name?
Raul Pal.
Yeah, I can never say his name. Yeah, I've been told by everybody that Ethereum is the place to be. Well, is it possible that it loses 90% of its value like everything else from its highs?
It's the end.
What's that?
I reckon this could be the start of the bubble bursting.
Oh, you mean it's just starting? Holy cow! Wow.
Yeah.
Now tell me why you say that, Ryan. Now you just piqued my interest. It's the start of the bubble bursting. That's scary.
Well, we've been here before, haven't we? We've been here when it came down through 40, through 30. Every time there's a big sell-off, it's the end of the world in cryptos. But this is looking a bit more end of the worldish, in my opinion.
Okay. Well, why do you say that? And elaborate a little bit.
Just because it's becoming more widespread. I mean, you know, I've got a stream on TweetDeck, for crypto stuff, and you just get a feel for the mood that's coming through. All the people are just getting creamed. All the hodler stuff, and if you start getting all the people who were pumping, hodl, and they're all turning around and saying "get out," as someone in the chat has just said.
Yeah,
it's just becomes a snowball, and then somebody just starts pushing the big sell buttons in the institutional side, and that's your lot. Then you just clear everyone out.
Yeah,
this might just be another flap out, and I'm completely wrong, but I've seen these situations before, and the risk, my risk monitor, my riskometer grows a bit.
Okay. Yeah. All right. Well, that makes sense. Hey, Kman, we haven't heard from you. Do you have any opinions regarding crypto at all? I mean, are you going to sock some away for your grandkids down here?
I have firm bidding at the fair value of Dale's teddy bear, which is around $30 in today's.
It's hard to ask. It's really hard to ask a professional like yourself that's been on currency trade desks for the last almost 40 years about like something that would theoretically replace everything they've done for their whole career. I mean, that's kind of unfair. Right?
I know. I'm telling you, honestly, I will replace my teddy bear with Bitcoin when it goes down to $30.
Oh God. All right.
No. I really think that, but I agree with Ryan. This may be only the start, and whether it stops at 20K or 11 or 12K, I have absolutely no opinion about that right now, but I wouldn't buy it here. That's for sure.
Okay. So does everybody know that, I had Dogecoin up here at some point. I don't even know I know why it fell off my screen, but Doge
guys are starting to need to put money to keep stablecoin pegs. Isn't that worrisome?
It's all very worrisome, this Celsius situation. But since what was the night that Elon Musk was on Saturday Night Live? Somewhere
that was it,
right?
Yeah,
was that it?
Yep.
And we are down 93% from that point. Isn't that crazy? And people still listen to him that he's going to buy Twitter. Just for the record, just so everybody knows that. All right. And look, it's going to be interesting to watch cryptos in recent or in the next few weeks. So let's talk a little bit about the dollar index, because it is FOMC week. We have the Fed coming up. What do you guys, what's your call, everybody, for the Fed this week? What are you thinking?
50. I
really don't know anymore.
Really? So you're not even going to go with 50, Stel? Who, me?
Yeah. If you ask me what I think they're going to do, I think it's 50, but I'm really not sure at all.
Okay. Well, Kman, you have an opinion here?
No, it's the same. 50 or 75 is in my percentage possibilities even. I mean, they could do either one of them.
So I'm gonna take a step back for a second, and I want everybody to know I took some losses shorting the dollar last week. So last week was, I gave back some profits, and I'm in the camp of this. This is a monthly chart, right? And let's get rid of these. Okay, and I'll come back and redraw. So the last monthly candle, right?
Yeah,
we had a false breakout, big reversal candle, nice nice, you can call that dark cloud cover, pin bar, whatever you want to call that reversal candle, it was gnarly this month.
Yeah, in your face.
It's in your face, right? Yeah. But we still have 15 days left, or more than that. We have, we have nearly half the month left.
Right.
So it's going to be really interesting to see the dollars respond by the end of the month. But this is obviously being powered by this risk aversion move that we're seeing. If the S&Ps trade down to 3,600 later on this week because of the Fed, that's as a result, the dollar index is going to be trading at 107 monthly chart or not. You know what I mean? So I was trading like kind of into the strength last week, trying to short some dollars. It obviously didn't work out. But you take those types of risks, right? That's what we do in the markets. So anybody that says they don't take losses is
not real.
No, they must be God. Like they must be gods. All right. Anyway, so here we are nearing the 105 level, big level resistance. I think this is going to be, make or break for the dollar index. But isn't it interesting that you can see how big of a risk aversion, tool this is, being the dollar. As the S&P approaches the lows and we hit new lows, the dollar index is, right back up towards its highs. But it'll be interesting to watch over the course of the next couple of days. Keep in mind the FOMC is on Wednesday, and just for the record, my call is they only do 50. I don't think that they're willing to completely derail the markets at this point. They do seek the stability. Is that what Trichet used to say? Can you say it? Come on, Stel. You can French it up much better than me.
Stability.
Yeah, the stability. No, actually,
every little breeze seems to whisper Louise. Hey. Well, you guys do a little, Marie Chevalier.
I know you can, Dale, but thank you very much. And I want to say, hey guys, thank you all so much for being with us today. I know you got an interview coming up, Dale.
Yeah, Arnout is with us.
All right, and just let you guys know, for the trader funding program, we did initiate finally we launched the $1 million account. We've been talking about that since we launched the programs the last 3 months.
I'm waiting for the billion.
It is, the million's out.
Billion.
Billion. No, thank you.
But be a good assessment fee.
We've had enough. We've had enough people go. Enter into our to the real money accounts to where, we're now comfortable doing the $1 million account. So those have been that had just got launched last week. So at the end of the week, actually on Friday. So we have new people that access live larger accounts every single week. So check it out. Trader funding program. It's our webinar sponsor, show sponsor, excuse me. All right. Kman, Ryan, Dale, not so much Stelios. You guys all have a great day.
Love you, bro.
Thanks, team.
All right.
All right.
Thanks, everybody.
All right. Thanks for prepping everyone, and patience, I think, is the buzzword today. What do you think? Anyway, it is every day. Arnaut, welcome back. Gosh, it's been such a long time. Looking forward to talking to you.
Hey, Dale.
Arnaut, yeah, it's been a real long time. I can hear you. Welcome back to F.A.C.E.
Thank you so much for having me. I am really honored and stoked and excited to be on your show again. It's been almost 3 years, believe it or not.
Oh my God, you're back. You're back in the rotation. Sometimes things just end up on the slip through my fingers like trades. So do you want to share your screen? Have some things to talk about?
I think we have some things to talk about. Yeah, what should we talk about? Let's see. Where do I share my screen?
It's on the bottom green box. Share screen. See it? You just scroll your cursor on the bottom and they have different icons. Chat, share screen.
Share screen. There we go.
Yeah.
Share. Okay.
Okay. So looks like we're going to be looking at, if you could just, yeah, there we go. All right. So big picture for Bitcoin.
Oh, no, that's just something that was up there. We can talk about anything you want.
Okay.
I guess,
I'd like to be updated because when you got a hold of me, several months ago, I think that you were probably in the camp, and I want to know if you still are, even though there's been one more decline since that happened. Is this still a 4 with a 5 to come in the upside in the S&Ps? Are you still looking at that count, or has it been negated?
No, it has not. There's several ways to look at it. Let's see if I can move this bar here a little bit.
Whatever you came prepared to talk about is fine. I just remember that was the reason, because it seemed like such a long time. I think you said to me, well, we could be there by then.
We could be. I think that was somewhere in February. So, let's go back a step here. So this is the S&P 500 pretty much since the all-time high, which I've labeled here as the third wave top. Since then, this market has been extremely tricky in its path. This is what I would call a double zigzag. So I always say, when you have 3 waves lower, expect at the minimum 3 waves back up. In Elliott wave, for those that are not too familiar with Elliott wave, the market moves longer term in impulses higher, which are 5 waves. As you can see here in this little advance here from October into November last year, you get 1, 2, 3, 4, 5, if you can follow my cursor. It's loud and clear for everybody to see. And then here again in December, you get 5 waves higher. Those are relatively easy to track. They don't have to have too many deviations, but corrections are extremely tricky. So what we've seen so far, ever since the all-time high, is only 3 waves. Everywhere you kind of look, some of these 3 waves then become smaller fractals, 5 waves, but it's all what I would call a double zigzag. So at some point when you've done 3 waves,
you are a little muffled, or no? Are you using a mic or
I'm using a microphone. Can you still hear me?
Yeah, it's just a little bassy and stuff. Maybe just a little louder would be good. Thank you.
Let's give it a try. This better?
Yeah, it is.
Excellent. All right. It was a little, there you go. I can hear you better too.
Okay.
So now that we have so many smaller waves up and down, when you see a beginning of a impulse higher, which is 5 waves, you start to think we might start a new uptrend. One of the ways to look at it is, for example, here. So this is an hourly chart of the S&P 500, by the way. So it looked like we had from the May lows 5 waves higher. Okay, you can really 1, 2, 3, 4, and 5. It followed what I would call Fibonacci extensions reasonably well, where the 5th wave should target, for example, 176.4% extension of wave 1, measured from the low of wave 2. So then you say, this could be.
So was this breakdown? Well, you always have to reassess all the time.
Yes.
Can we put it in these terms, that your long-term picture hasn't changed? It's just taken longer for this to develop, and that we could be on the cusp of it at new lows. I think you had a box down there around 3740. I've seen that number before. And that we could be completing. And then I guess if that turns out to be a low, even the bears think there's a rally back to 43, 44. Bulls like you are looking for new all-time highs, right?
Yes, correct. So the problem is, if you zoom in more and more and shorter time frames of Elliott waves, it becomes more and more variable. It's much better to zoom out. The bigger picture gives.
Well, we're not seeing anything on the screen right now, or no?
Not at all.
No, you probably are you trying to show something else? You have to start a new screen share.
Oh.
Just hit the green button again.
This is so weird because the.
Don't worry about it. It's live TV.
All I get is a tiny little zoom screen.
Yeah.
There.
Okay.
That's so weird. Okay.
There it comes. Okay.
There we go. Sorry about that.
Okay, that's okay.
There. So yeah, so the focus now is on this zone. So in the Elliott wave, as people need to understand, is the market is all about the probabilities of possibilities. So you always have a preferred wave count and a alternate wave count, and you track the market to see if it's going to follow the preferred wave count, and if it then drops below certain price levels, that preferred wave count gets invalidated and you move to the alternate wave count. So as I showed here, this was the preferred wave count, 5 waves higher, possibly a wave 1 or a wave A, because both are 5 waves, and then possibly a 2 and a B. And this is what I show to my members for that sign up for my service that gives 3 per week updates, that if we drop below 4,045, we would target into the 3,900s. So that was already reached on Friday. So by Thursday, you already knew this was coming on Friday. That's the power of Elliott waves. You can really do those nice forecasts. But now I think the market had dropped too low to say, this is not a 1-2.
Yeah, it's not a retracement. It's another wave. Yeah.
No, it's another wave. So then you go, okay, well, then we have to go to the alternate Elliott wave count, which by Friday and Thursday already became the preferred, is that you had what I would call a irregular expanded flat B wave. So ever since the May lows, you had an A, a B, and a C wave.
Yeah.
And irregular expanded flats are very tricky because the B wave makes a low below the start of the A wave. So
and then is that 1.618 the B wave of A? The A bounce?
It's about there. Yes, I haven't done the fit math on it, but it's about there. And so it fits very nicely. So we have a 3-3-5 pattern, which is called a irregular expanded flat. So then you say, okay, we have our if-then scenario. So you have this alternate count kind of, on the back table sitting and simmering, and that once we drop below certain price levels, this will become the preferred. That's why I keep telling people, well, if you want to go long, make sure that you are really in potentially very high risk entry. So make sure you take profits quickly, set your stops.
I saw a couple tweets to you. Is it, is this it now? Is this it now? You kept coming back with, we have to wait for confirmation.
Wait for confirmation. What we want to see is 5 waves up. So we had the initial one, 5 waves up. And then we need to see 3 waves lower, and then the next leg higher. That's a nice one. That would be a much better setup than already thinking it's going to do something. Then, of course, the alternative is that we only get still 3 larger waves higher. It's always possible. The market reserves the right to really do 3 waves instead of 5. So you really honestly want to track 5 waves. But, that doesn't mean you have to sit on your hands and not trade it, or you can still trade it. You always have to make sure, whatever time frame your tickle is, so to say, that you take profits accordingly and that you set your stops accordingly. It doesn't matter if you want to trade 5 minutes or 5 years. You always need to have an exit strategy, right? If you don't have an exit strategy, you should not be in the market ever. And the exit strategy is taking profits and making sure you raise your stops and those type of good things. And that can be done on any time frame. If you do that, there's nothing to worry about. The fear index can be to 1,000. Everybody can be bearish. It's to the point where it's hilarious, where you can now buy T-shirts that say "bull trap." Talk about being right. I've not seen this before already. Sentiment is down the drain. It is hip to be bear, according to the news.
I like this stuff.
What else did I see? Something was extremely bearish in the news. Sentiment is, of course, according to sentiment indicators, completely down the drain. But those are conditions. They're not triggers. Price is the final arbiter.
Right.
So when you say, okay, I have my preferred wave count, why do I prefer it as a 1 and a 2 and not as a B? Because now the B wave was right. Then you say, you know what, I'm going to look at, for example, other indicators, which is in this case, we had a very strong market breadth rally going into last week's highs pretty much. So we had very strong readings, which most of the time, if you go back in history, coincide.
Yeah, that is pretty strong.
Yeah, that was really strong here on the right side.
Hasn't been that strong since the COVID low.
Correct. Absolutely correct. So then you start to add the puzzle pieces together and you think, you know what, we might have some legs here. But I always say price is the final arbiter, right? The first thing is price. Price determines everything. Market breadth.
Price is the man.
That is the man, absolutely.
Go ahead.
And then you say, okay, well, the market breadth seems to support higher prices. We had almost what we call a thrust event. Some other indicators had a thrust event, but apparently the market decided it was not good enough, and lower we go. I think the futures are down pretty much. And then you simply go back and you say, all we do is we anticipate, we monitor, and we adjust. So we anticipate a potential new impulse. We monitor for it. We already know that if it's going to break down, that the market has another option, which is the alternate count, and then you move on. And that doesn't mean you move the goalpost, as people say, or you don't know what's going on. No, I always say you have to be careful of people that never present an alternative wave count. You might be right for 5-6 months in a row, but at some point you're going to get extremely burned because you don't understand that the market is about probabilities of possibilities. So it has these two options. Why did I keep this option here? Because this decline was only 3 waves. If I look at it very accurately, and I go, this kind of kept me awake at night. I don't understand this decline into the May lows. Yeah. And now that we're dropping lower below the May lows, this all makes sense. So the alternate wave count is not preferred. That then brings me to the big picture. And this is what I like. You want to kind of zoom out. So this is the S&P 500 since 1922. I know the S&P 500 technically has been around since the 1950s. And these are just simple yearly candles. Every candle is 1 year, open and close. And every Elliott waver that I'm aware of that I would think is worth its weight in salt knows that the 1929 all-time high was what we call a super cycle. You can call it a cycle or whatever name you want to give it, but that's a wave 1. And then we had in the 1930s a wave 2. That was the big crash, the biggest crash ever in the stock market's history. And we're now moving towards a super cycle 3. Now, question is, has this super cycle 3 already completed? Yes or no? Well, if we look at simple yearly candles, it suggests we need 1 more up year and then we complete it. It could have already completed if the up year is a part of what I would call a large flat. And flat waves are quite common for fourth waves. If you look here at cycle 4, it was a flat, an A, a B, and a C. Just like the flat I showed you on the hourly time frame, you can see it here on the yearly time frame. So the market is fractal. So what it does in an hourly time frame, it does it on the yearly time frame as well. So the market pretty much declined for 3 years, went back right in the 2006-7 to the all-time highs, and then dropped really hard. And most likely, super cycle 4 will be something similar, but on an even grander time frame. Think about the decade.
Okay, that's interesting. A yearly look at that. So where would that come in? 9, 20, 30? That's way out there.
Don't know. This is not a timing or a forecasting. It's simply trying to project how things are going to move based on simple closing prices. In the sense that, a closing price is a corrective year, right? Down years are corrective years.
Do you know if before the crash it was a 9-point cycle to the top in 29? Because I see it was in,
it was here.
Yeah,
it was. We haven't gotten there yet. I cannot make it 9. So what could happen is that the next rally will be a B wave of a irregular flat, for example, and that the market still tries to reach to 5,500. One of the interesting things, for example, I showed you here, we have this large flat wave 4. So this was if we go back here quickly to the 1930s, this was a zigzag, what we call. You have a leg down, of a down, up, down. Very simple. It's called an ABC. It's a zigzag. If you go into Elliott wave, it's a zigzag. And then most of the time in Elliott wave, the rule of alternation says if the wave 2 is a zigzag, then the wave 4 is a flat or a triangle. Most of the time it's flat. Triangles are a little rarer than flats. So if we had a zigzag supercycle 2, which it was if we zoom in on a monthly time frame, it's most likely going to be a flat supercycle 4. If I'm going to zoom in a little bit more, so this was a flat cycle 4. Then the 2020 low was also a flat. I'm going to see if I can find you the chart. Let's see, lots of charts here. Let's see here. Well, let's go. Yeah.
Okay, eventually you're looking for 6,000. It looked like on that one chart. You have a lot of charts.
Yeah, a lot of charts.
Yeah, you live them. Yeah.
Yeah, you have to track a lot of stuff. So here is a zoom in on the 2018-2020 time frame. So also here we had an A, a B, and a C wave. So we had a leg lower, a leg higher, which made a new all-time high, and a leg lower. So this was an A, a B, and a C. Now here I have the B wave topping out here. I thought it would be a regular flat, but this is called the irregular because the B wave goes beyond, in this case, the all-time high. And then we had a crash. And that crash, by the way, was 5 waves lower on the daily time frame. It's absolutely beautiful. If you look at the crash, let's see here if I can find it. This is the market crash in 2020. 1, 2, 3, 4, 5, picture perfect. So then we had a B wave top here in February 2020 and a C wave low of a irregular flat wave 4. So far, the cycle wave 4 made a new all-time high. The primary 4 made a new all-time high. Most likely, the super cycle 4 could do something similar. It all depends, I guess, on market environment, how bearish we get, the Federal Reserve, all those variables go in there. I'm not too much of the why type of person. It's fine. Price will tell me because price is the final arbiter. She said price is demand. And that was just going to follow nicely.
Okay, so what's your strategy going forward on your alternate count?
That one, well, this one is off the table now.
Right.
So this one, I'll just let it fill in itself, track it. Most likely this is a C wave, a 1, 2, 1, 2, and then you get the 3, 4, 3, 4, 3, 4. As I showed here, I'm kind of tracking these 3, 4, 3, 4, 5 waves. So I think we have a couple of that we're now still in the third wave of the C wave. And after 3 comes 4, and after 4
comes 5. What's the time frame on this chart? Daily?
This is daily, sorry. Yes, this is a daily time frame. Okay. Again, I think I started with this one. So then we should see how this is going to fill itself into the ideal target zone, the focus for now, and move on from there. But eventually we'll get some updates and some further down days, which will be the 4th and 5th waves to complete this C wave. And
you have a view on, okay, go ahead, I'm sorry. Go ahead.
And that should last a couple of days at the minimum to fill in that low. That will take to complete this orange 4, this gray 4, and then etc. That will take several days at the minimum.
Could we be there by the solstice? That's the 21st.
We definitely could be. That seems like a pretty good timeline.
Hold on, my tinfoil hat fell off.
Yeah.
Anyway, do you have a view on rates, Arnout? Anything? I mean, the bonds are about to make new lows, and the 10-year took out its previous high. Are you following the bonds or interest rates?
Unfortunately, no, I'm not.
Okay.
No.
Okay.
No.
And you have another guy that covers gold. So you're mainly watching the indexes. A view on the dollar?
I don't.
Oil?
A view on the dollar.
How about oil?
Oil. Yeah, that was.
I know you cover oil. So are people crazy trying to top pick the oil up here?
Yeah, let's see. I haven't followed the commodities too long.
That's okay.
But the oil, let's see here. Yeah, so I have it in a third wave. Sorry, the chart has
it's okay.
Has moved a little bit there.
Yeah.
So this was my original projection for the 3, and then a 4, and then this one should move a little bit lower, something like this.
So you're looking for like, you know, $200, right?
Yeah, somewhere around there. I would say let's start first looking at about around
160,
150, somewhere around there, 150 plus or minus 3 or 10, something like that. Because then we know if it's only 3 waves higher or eventually 5. We don't know yet, right? So that's the thing. We never know beforehand if it's going to be 5 waves or 3 waves. So we start off with the assumption that it's going to be both 1, 2, 3, potentially 4, potentially 5. Then we'll just let the market decide if it's going to be 5 waves or not. Most, by the way, big guys, they will sell into the 3rd wave. And then eventually, because the 5th wave is where the retail investors jump in.
Right.
So far looks good. Yeah. So I guess around 150, 160 looks for a nice top.
Okay. All right.
Unless we start breaking lower. Yeah.
All right. So where can people, besides following you, Arnout, on Twitter at Intel, that's Intel with 2 L's, _invest. You can show your website and
sure.
How would people get involved with you? One thing I noticed through this whole interview is that you're not just an Elliotician, but you're a disciplined trader, because you talk about your stops and your money management, and you know, if the market does this, so you're waiting. You remind me of people that, you know, wait for confirmation.
Yes,
instead of trying to guess and get the edge and then get cut. So so this is where people can find you.
This is where people can find me. It's called intelligentinvesting.market. So
you have a free trial newsletter, I noticed there.
So they can sign up. I have 4 or 5 different services. If you don't like Elliott wave trading, for example, you can sign up for my trading alerts. It's where you get an email 15 minutes before the market closes. It gives you alerts on all the ETFs that track the major markets. That trading service is up about 10% for the year now. I think it's clearly market beating. So you can do short term, intermediate term, long term. It tracks all the ETFs. You get an email. Same for the cryptocurrencies. You can sign up. You can get the regular crypto trading.
Where's the bottom in Ethereum? 400?
It's definitely dropping lower than I ideally have seen. I would have liked around 1,500 plus or minus 100. So now that we've broken below it, I think the next level to watch is around 1,000.
Yeah.
But it's
what a baton death march.
One more time.
Well, that's historical. That was during World War II, the baton death march, you know. So anyway,
I'm not sure.
It's a little history from, you know.
It's a little history.
Anyway, so go ahead.
So I follow cryptocurrencies. Same, I do the Elliott wave counts on the cryptocurrencies. I knew we were talking, I think already in January of this year. I sent out a special alert to my members. Careful out there. This looks like we're starting to put in some major top here. I'm do start to get bullish, definitely on Bitcoin, but I do need to see again a reversal, higher highs, higher lows, right? That is the sign. I don't see it yet. It's so far just only lower lows and lower highs. I follow it. You can get the same. You can get the trading alerts if you don't want to use my insights for making decisions on the trade. Again, I don't tell you what to buy.
If Elliott wave blows your mind, you could just get the trades.
Just get the trade alerts.
You do it for people that just don't want to absorb all your
exactly. This is as easy as 1, 2, 3. All it says, buy, sell, hold. You don't have to do it. Nobody's putting a gun against your head. But if you do it, then you've got to follow all the signals, because the signals know much better. My trading alert service, for example, short term, went already into inverse ETFs last Thursday. They're up 10, 15% by now. Trades. That's how easy it is. There will be losing trades. Just as in your previous interview or the session that was going on and I was listening in, such a great remark. Like, I don't know who it was who said that.
Blake.
Blake, yeah.
Blake,
They're all will always be losing trades.
We're just real with our community. That's all.
Absolutely. If you cannot handle losing trades, then you should not be in the markets. But if you keep your losses small and let the runners win and take profits and all those things, but cut your losses, you'll do fine in the markets. You will. If you do not, then you will get destroyed, and then you will send me a nasty email saying it's my fault.
Yeah,
that's how it goes. Now we take full responsibility for our own work. And if you can't or don't want to listen to a 15-20 minute video every other day, then just sign up for the trade alerts and you get them. And it's market beating. The performance is on my website. I'm up on the S&P 500 15%, and it's down 13%. That was by the end of May. It's down a lot more now, of course. And the trading systems are up because they go into inverse ETFs, right? It's kind of like shorting the market, which is great.
What do you use for the S&P?
We use the 3-time ETFs for the short term, which is based on the daily time frame.
That's QQQ.
Yeah, for the NASDAQ and the NASDAQ 100, and we use, of course, SSO and SPY and QQQQ for other time frames, because you want to use the right ETF for the right time frame. The leveraged ETFs are not appropriate for long-term.
Yeah, they
investing.
have decay. Yeah, they have decay like options, not as extreme, but they do have decay.
They do. So if you're going to hold them for a long term and sit through a very long correction like now, it will take a lot longer for them to go back to even break even. So that's not the right vehicle. So you've got to use the short term for the 3-time ETFs, and the long term is the SPY and the QQQ, and you get a nice dividend on them as well. So that's what we're trading and tracking. And the systems I always know best. Why? Because they follow the trend. And if the trend is your friend, then you get a friendly return in your portfolio as well. No brainer. It's super easy. 1, 2, 3. That's all you need to do.
Thank you, my trading warrior brother Arnout.
Thank you for having me, Dale.
Yeah. Good luck, and have a great trading season. And I root for you and all the people you advise, and appreciate you being here with us and sharing your accounts with us.
Thank you so much. I hope people learned a little bit, got a little bit of insights, and stay positive out there. I know it's very hard. A lot of people are very negative currently, but be nice to each other. Go pet your dog, hug your wife. It's all good. The markets will recover. If you saw my big picture chart, we're not done yet. There's still 20 decades of a bull market left. And currently, we might go through a nasty one for now. But yes, I still think eventually we'll get to 5,500. Maybe not as quickly as I thought we would, but it's okay. We anticipate, we monitor, we adjust. But I think for the long term, we'll still be fine. If everything goes to zero, we're all going to be dead anyway. So that works, right?
Yeah. And Arnaut's best call, wrapping it up, is kindness. Everyone use a little kindness with just be kind.
Be kind.
Be nice. That's it. It's not complicated.
No, it's
not. There is no alternate count for being kind.
No, there is not, Bill. No.
So we'll leave you. What kind?
Thank you.
Kind, bud. All right. All right, everyone. Well, have a great day. Thank you, Arnaut. I'll get a hold of you on Twitter. And everyone here, you could join the team on the Morning Edge in 12 minutes. Remember, don't just count your pips, count your blessings. And we'll see you all tomorrow for Turnaround Tuesday. Adios. Thanks, Arnaut.
You're welcome. Thank you, Dale. Take care. God bless.
All right, buddy.
Bye.
Bye-bye.